Hi, I'm Frederick with Kandie Real Estate. Do you still think you need a 20% down payment to buy a home? The answer is no. That is one of the biggest misconceptions I hear from buyers, especially here on the Central Coast, where prices can make buying feel completely out of reach. But the truth is, there are loan programs that may allow you to buy with 3.5% down, 3% down, or even 0 down, depending on your situation, the property, and the area. I talk to buyers all the time who assume they need to save $100,000 or more before they can even start looking. And many times, that is not the case. Sometimes the bigger issue is not whether they can buy. It is that nobody has helped them understand which loan programs might fit, how much cash they actually need, and what price range makes sense after we factor in payments, taxes, insurance, and today's interest rates. Suddenly, buying a home went from years away to something they could do much sooner. But is it the right time to buy? If the payment is comfortable, the answer is usually yes. For many buyers, the biggest hurdle isn't qualifying, it's simply not knowing their options. So let's look at those. Number 1, FHA loans. Low down payment flexibility. FHA loans are one of the most popular mortgage options for first-time buyers. These loans are backed by the Federal Housing Administration and are designed to make homeownership more accessible. One of the biggest advantages is the down payment requirement. Qualified buyers can purchase a home with as little as 3.5% down if their credit score is 580 or higher. This can be helpful if you have steady income but limited savings, or if your credit profile is not perfect. There are also down payment assistance programs that can apply. Number 2, conventional loans, as little as 3% down. Many buyers believe conventional loans require a 20% down payment, but that's not always the case. Programs such as Fannie Mae's Home Ready and Freddie Mac's Home Possible allow qualified buyers to purchase a home with as little as 3% down. These loans are designed to support first-time buyers and moderate-income households. The advantage is that conventional financing in an offer can be cleaner from a seller's perspective, and mortgage insurance may be removable later once your home reaches about 20% in equity. Number 3, VA loans. 0% down for eligible veterans. For eligible veterans, active duty military, and certain surviving spouses, VA loans can be one of the strongest options available. VA loans allow qualified borrowers to purchase a home with no down payment and no mortgage insurance. These loans also tend to offer competitive interest rates. Another valuable tip is that veterans with a qualifying VA disability rating may also receive property tax reductions or exemptions here in California, depending on the disability level and their situation. That can reduce long-term costs substantially. Number 4, USDA loans, 0 down in eligible areas. Another option many buyers overlook is the USDA Rural Development Loan. This is especially important in our area because USDA does not just mean farmland or remote property. Some smaller communities and rural designated areas may qualify, and USDA can allow eligible buyers to purchase with 0 down. But there are income limits, property eligibility rules, and location requirements, so you really need to check the specific address with the lender. The program is designed to support low to moderate income households purchasing homes in approved locations. The biggest misconception about buying your first home is that you need a massive down payment. In reality, several mortgage programs exist to get you started with far less money up front. If you're thinking about buying your first home, the best first step is to look at the numbers early. I'd be happy to walk you through the possibilities and help you understand what your next step could look like. Thanks for listening.